Good morning, trading world. We're up and at it again. We're after the Fed. So what now? For those of you who saw the video yesterday, I game planned or put a plan together to act on before the Fed, which basically told you to ignore the overextensions of the lower time frames, and some of the most important things that we were looking at were that we hadn't quite cycled on the weekly chart as of yet. We still haven't cycled on that weekly chart as of yet. So I'm going to kind of map out the day, and pretty much everything that I said yesterday, that game plan still holds. We got our overshoot of 464, but 464 was the area that I was looking for us to jump up to yesterday. We got that. And now I'm pretty much just sitting and patiently waiting on a signal to go short. I can see that the rubber band is stretched very far, and overall things are setting up for a great bearish swing trade, but all the signals hadn't aligned for us to get short as of yet. So the way that I'm looking at playing this, even coming into today, I don't mind taking or getting long today, but if I do, it's going to be small and it's going to be only intraday. No holding anything long overnight. So with that being said, we still have the volume divergences and indicator bearish divergences on all the lower time frames. Like I said, we still hadn't cycled on the weekly, so you kind of have to ignore that just a bit. And where that kind of leaves us at, it gives us this, puts us in this area of kind of a weird sideways chop. And that's basically because we're consolidating. To most people, it doesn't look like a consolidation because the ranges are so big. That's because we're consolidating on a higher time frame. So what that is going to kind of look like, let's see if I can just kind of explain what that sideways chop with these downward spasms mixed in, what that'll kind of look like. We're probably going to go, like I say, this sideways chop, and could even possibly grind a little higher, and then all of a sudden we're going to get these down spouts like that kind of just get in the way, and we'll grind back up, and then boom. That's kind of how things are going to play out for the next couple of days. And actually, we may be stuck in this type of pattern for a while, possibly to the end of the year. It wouldn't surprise me that we continue to grind in this sideways chop, and then boom, you get this spasm down real quick, and we try to grind our way back up. That's kind of what I expect pretty much to the end of the year. Another thing that's of importance to me, there are 7 trend metrics that I track on 6 different time frames, and I've done this for the last 10 years. And whenever a time frame reaches 7 out of 7 bullish or bearish metrics, we usually get a reaction to the opposite bias. For example, if we have all 7 metrics showing bearish, then it usually tips us off that we're getting a bullish move. Now, on the lower time frames, you could look for that move to happen that day. But on 4-hour time frames and above, there's a timing lag. And the larger the time frame, the larger the timing lag. I'm saying all that to say that today on my daily time frame, all the metrics registered 7 out of 7 bullish. So, by following the logic, that means we have a bearish move coming pretty soon. And on the daily time frame, that's usually somewhere within the next 5 days. So, I wanted to put that out there for you so that you understand the risk and kind of have a heads up and looking for something like this to happen. Now, going into today, we just crossed the jobs report, and with the jobs number and us not getting a significant move on the jobs number, it kind of tells me that we may be in for a range day. And a range day is basically where we're just going to go consolidate back and forth. Excuse me, back and forth, high and low. We're going to stay possibly in this channel just back and forth. That's usually what a range day or range day principles are. It doesn't call for a breakout. We just establish a high and a low for the day, and we basically chop between those 2 points. That's what we're looking at. The levels of importance today: 465.59 and 466.35. So if we look at those levels, if we put that 466 level up, and I'm looking at a support level of pretty much 464. If we have a range day, we're basically going to chop between those 2 levels. That's the highest probability outcome that I see today. I have it at 45% probability. So that's the number one option to look out for today. So if we establish a high, we can get short to support, and then you can also take the other side of that move by getting long and playing to the top side or the high of the day. That is going to be scenario number 1. All right, just to label that, again, we hold support at this 464 area, and we basically chop back and forth between that 466 area. 466 is very important today. It happens to be the expected move, the market maker's expected move of the week for the SPY. And when we get to that area, it's an area where risk is comfortable being. So there are large blocks of orders, or kind of a seam in risk at this area, and that's why we feel comfortable chopping back and forth. And that's also the reason why, in order to get us off of this area, it will take a large push, and we should be able to see that with a big volume candle happening in order to push us off once we get to the edge of this 466 in either direction. You'll have to see a very large volume candle to push us off of that area. All right, scenario number 2 that could possibly play out today as well is that we get another wild trend up day. And usually we don't get 2 back-to-back trend up days, but right now the market is irrational, so it's possible. It's always possible, but the probabilities are usually pretty low. But because the market is so irrational right now, it is possible to get these wild trend up days back to back to back. So on the trend day, what we would see happening is that we would get to this 466 area, and we would probably chop around that 466 area, and we would get a large volume spike, which would give us enough strength to break free of that 466 area, which would then power us up toward that 468 area. So that would be or look something like this. Again, we come up to 466, chop around the 466 area for a bit, get that large volume spike that would propel us up off of 466, and that would get us headed toward that 468 area. That is scenario number 2. Option number 3. This has a lower probability. I see this more so happening Friday or tomorrow, which lines up with the longer term signals that I've been looking at of seeing a spasm or breakdown starting on the 5th, which is Friday. This lines up again with more so what I see happening on Friday, and it is pretty much we have a support area at 464, and we come down, test the 464, bounce off, and then you see us gain strength or gain momentum and going through that 464 area where we break through it. We're going to get a retest before we actually follow through on the downward side. So, and if we break through, it's kind of hard for me to see it all happening in one day or today. But once we break through that 464 support area, we're going toward a retest the 461. We're definitely going to pop back down toward the 461 area. So that would be a likely target once we break through 464. Again, it's kind of hard for me to see us having another wild trend update, especially since even after the job numbers, we didn't get a big spike to the upside. Nothing really, there was no wow with the job numbers for me. And in fact, on the lower time frame, we actually went down once the job numbers were released. So that's kind of an indication to me that today is going to be kind of a range day in preparation for a big move that's probably going to happen on tomorrow. One other thing that I wanted to address, I was asked the question about what I meant about topping being a process. One of the things that I meant about the topping being a process, let me go back and see if I can find an example really quick. We're going to go to a higher time frame, and let me kind of clear it out a little more. When you go this is a great example right here. All right, when it comes to bottoms, bottoms are usually an event. And in the event of a bottom happening, we could go down, touch a level, and never go back to it. We could go down, touch it, and we take off from there, and we never look back. As you can see right here, we pretty much touched this area. Let me highlight it. We made this bottom here, touched it, and took off from there. So bottoms are an event. That was an event that took place. Now let's look at a top. Anytime we hit a top in the market, it's a process. We usually go back and retest it. It's never a singular event. And I'm trying to go back and find a more recent top. Even if we look right here, we came in, we kind of made a top, backed off, pushed for a higher high, backed off, retested it before we went down. It may be easier to see on a lower time frame, but tops are usually where you get all these different patterns, like a head and shoulders, or coffee cup, coffee handle, whatever it is that they talk about. I'm not into a whole lot of patterns, but tops are usually where you're going to get these different patterns at, where you get a shoulder where you think it's the top and we pull back. Let's see if I can get some drawing aids up here. Okay, on a top, you get what you think is a top, we pull back, and then we retest and push higher through that top, pull back, retest the top again before finally getting away from it. That's what I mean by a process. It's never just we hit the top and then we just tumble over and never go revisit. We can do that on a low, but when it comes to a top, there's always going to be a retest of some sort, where we try again for that area and either fail or push through or chop sideways. Somehow there's always drama with the top. There's rarely ever a clean top. It happens, but it's very, very rare. So that's what I mean by topping is a process. So that's it for today. Wishing you good luck with your trading. Always know your risk, and everything else will fall in place. Have a great day.